UBS seeing better value in bonds than equities. So what should we expect for rates from here? Do bonds provide better value at this point than stocks? Joining us is TD Cowen President Jeffrey Solomon. Jeff, do you think we've seen the top in yields?
I think we're closer to the top than not.
That's an easy dodge.
No, it's not. I mean, I really do. It's hard to make the argument. But is there like a 1 in 10 chance that we have to take that rates spike from here? Sure, there is. But I think a lot of this has to do with the way the Fed is playing things. I actually think they're doing a good job at continuing to talk down inflation. Having said that, I think short-term rates will be higher for a lot longer than anybody has prepared. And I'm always amazed that the market seems to think there's going to be a hard pivot here. I think it's going to be higher for longer.
So then how do you take the question on whether bonds offer more value right now than stocks?
Well, because I think if you look at it, I mean, it's hard to pick the top. And so on a relative basis, right now, you see that equity yields versus bond yields are actually pretty decent. And the real rate of return, if you take a look at CPI versus 10-year, is actually pretty balanced. Having said that, when you look at what happened in the 70s, and what I've been looking at as a proxy for where the Fed is going to be, they're going to continue to lean on this to ensure that inflation just goes away, because we had that huge spike at the end of the 70s again. That's exactly what they don't want to have happen again. So I'm looking at it. They've certainly done a good job at bringing inflation down, and I'd like to see that sustained for a period of time before I call a pivot.
It's the go-to for the doves right now, that 3-month annualized, you're kind of at target.
Yeah, I mean, I think if you're sitting on cash, you're feeling pretty good right now, and there's no reason to hurry it. Equities, if you look at it, you haven't missed much in equities if you actually didn't invest in big tech. And I think that's one of the things that we've been looking at, is that the rally here has been super narrow. It's like 12 stocks driving most of the performance here. If you look at the S&P on just not a market cap weighted basis, just it's down for the year. Like this has not been a tremendous risk on, particularly for smaller companies. So again, that has to play out over time before I'd say it's safe to sort of come outside.
Which is why some people say this is not a bull market. Right? Classic bull markets, you kind of make money in everything, at least to a little shaded degree.
Yeah, this is not. But again, this is part of the mean reversion that we saw of 20 and 21. So I think this expectation things are going to reverse so quickly, maybe a bit overdone. And I would say I was probably in that camp too. I thought things would reconcile much faster. But it's been a while since we've seen inflation. So a lot of us are coming to grips with how do we manage capital in this kind of an environment.
So what's it mean for the capital markets that you are in? M&A, IPOs, started to see some spurts of activity. Yeah. But I don't know, since we've seen this other leg up in rates, what that's done.
Well, so I'll start with equities. I mean, with the equity market, IPOs are on hold for a little bit. I think that has to do more with geopolitics than anything else, and we'll see how that plays out. But certainly they haven't performed well this year. And so when IPOs as a class don't perform particularly well, then it makes it harder for others. Bunch of folks are queuing up, though, for next year. I think there will be some movement on that front. As it relates to M&A, we've actually seen, particularly in the sponsor area where we spend a lot of our time, we've seen a lot of M&A activity. I'd say more M&A activity in the third quarter this year than we've seen in a long time. More equity underneath LBOs, more in sponsor deals. You're finally starting to see maybe 50% on average equity beds underneath these deals. And I would say the bank market for financing them is still a little bit, tight, certainly after the things we saw earlier in the year. But the direct lending market continues to be hot, and folks are looking at those places to go get their deals financed.